Well, hello. We're going to have a little look at the euro dollar and see how to trade it. Hi, and a warm welcome to one and all. For those of you who haven't been here before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. I wonder what gives you that idea. Yes, I do have lots of toys on my desk to keep me amused, but the idea of the channel is not to show you my toys, but to give you an insight into trading and maybe show you a little trick or two along the way. So if that sounds good, please help me to help you by clicking that little subscribe button, sharing the videos. It genuinely helps, and I'll show you what I'm looking at. So today is Monday. I don't genuinely trade a lot on Monday because the markets are very erratic. They're quite hard to judge. However, if I see something that is pretty darn good, I will just put a little trade on. And that's the nature of trading in general. Don't look to be chasing the markets all the time. Look for 1-2 good trades a day, manage it well, and you'll find at the end of the week you have a lot more money than you did when you started. See, it's very easy to sort of try and dip in and out the markets, catch every wave, and I see it every day, certainly with people that message me and one thing and another. They're so obsessed with chasing the money, they forget about the process. And the process does not happen like that, you know. And when I see these clouds,
you ding dong,
and they're saying they're turning 200 into 10 grand in a week, I've done this over 15 years. Trust me, if it was that easy, there'd be a lot of millionaires about, but there isn't, you know. Trading is a professional career. You must put the work in, and you have to understand what it is you're trying to achieve. If you're just trying to achieve money and chase the money, because that's the one thing I get all the time. I want to be rich. Show me the money. Give me the money. I can't help you, you know. And when I get these messages now, I just kind of gloss them over because I know they're never going to make it. You have to put the work in and you have to understand what you're doing. But if you are willing to look at it as a career, then I can help you, you know. And I'm hopefully the guys in the group that I run can sort of share that, because I genuinely have their best interest at heart. Well, actually, my best interest is here. Oh, look at you. Thank you. See that? How timed was that? Things that are close to my heart. The coffee. Because we all know Scruffy likes a coffee. He likes this as well.
hello,
You dirty old man.
Sorry. I am an aging child, and I do have a love of the movies and one thing and another. But you're here to see the charts. So let me show you what it is I'm looking at. Okay guys, today is euro dollar. And why is it euro dollar? Well, the first thing I do every morning is I make up a strength sheet. Now this strength sheet is just a set of calculations based on the last few days, and it kind of helps tell me movement, not direction. All right, so I'm looking for pairs that have got a good bit of volatility building up in them, and I want one that is strong and one that is weak, that are poles apart, so they'll do that. Okay, now you do have your normal favorites every day. I have kind of a basket of 8 that I look at every day, and they will move regardless of what's on this sheet. Things like cable, oil, the DAX, they move a good amount every day, which is why I color code these in blue for day trading, you know, because I know they're going to move. swing trading takes a little bit of time for them to get their wheels turning. And that's why I use this. But today, out of everything that's been pulled out, the euro dollar is the best contender, because this is only the first part of trading. This just helps filter down what it is I'm looking at. And as I can see, there is the euro. It's relatively weak. And the US, the dollar, is strong. You know, it is incredibly strong compared to that. And when I look at the rate of change, the dollar is still quite poles apart away from the euro. So there is movement there. So that's the first thing that I do. Then I have a good look to see what's going on with the chart. You know, read the chart if you like. And I started at a high time frame, and then I work my way down. So in this case today, if I look at the 4 hour, this is on a wonderful drop. Okay? But nothing can move in a single direction indefinitely. It really can't. So your levels become important. And I can see it's stalled here. But that is showing no signs of slowing down. So there's another level underneath it that I'm going to keep an eye on. Drop it onto the hour. And sure enough, I marked up the first zone so I can see what's going on and a potential entry point. Now at this moment in time, it's not in play. Okay? I still think this has room to go down. But if I drop it into a 15-minute, just so I can see what's going on, you can kind of see that it's trying to push up. It did close in this entry area. However, my belief is that this is moving further down. All right, certainly for now. And when I see something that's dropping that fast, you don't want to be catching what's called a falling knife. You really don't. Because the angle of descent is great. So I want to see it bottom out a little bit. Confirmation, if you like. So what I'm doing here is I'm waiting to see if that'll push down into this zone. And then if it goes back to there, I'll look to trade it at that point. However, if it moves down under this zone, I'll then redo the chart, put some more zones to this level, and I'll look to see how it reacts from there on. And that is the art of trading. It's not just clicking the button. The art of trading is reading the chart and being right at the right time. Simple as that. You know, I'm prepared to be market neutral, which I am on all sort of day trades. In other words, I'm prepared to go either way. When I'm swing trading, I pick a bias and I stick with it. But today, the way that I think this is going to go is I'm looking for it to go to the upside, but not just yet. It's a little bit early yet. If I drop it onto 5-minute candle, you should be able to see what time it is. It is 20 past 10. Now, in the group that I run for the Scruffy Squad, the guys were all in on this earlier on this morning, 9 o'clock. Put my 2 pence in at 9:15. Then they started having a little look at everything, what they are interested in. And I do a market strength video for them each morning. There's the sheet I've just shown you. I explain what it is, why it is, and which markets are best, or what I think might happen throughout the day, sort of thing. And then as the day progresses, I put trade ideas in for them, so they can kind of see well in advance what it is I'm looking at. Because it's all well and good sort of saying I did this at 3 o'clock, it's 7 o'clock at night. It's a little bit more difficult saying at, well, what time did I say this? This got posted up at 10 past 10. for something I'm going to be doing around lunchtime. So maybe Doctor Who does exist. I do like Doctor Who. The proper Doctor Who though. Tom Baker, not these sort of amateurs that are doing it now. Anyway, what I'll do is I'll pause the video just now because this is going to take maybe an hour or so to cook, and then I'll come back to you when it's ready to trade.
Well, we're waiting.
Okay guys, come back to the charts. It's now getting on to 10 to 11. I drop this down onto 5 minutes. Should be able to see the time. There it is there. We're on the quarter to 11 candle. I've been watching this pretty much since 10 o'clock. All right, as you know, when we were talking earlier on. I'm now interested. Why am I interested? Well, this was the area of interest that I drew in. I could have had an order within it to trigger an away straight off the bat and push up to here. However, my belief is that there's still a lot of pressure to the downside, so I wanted an extra layer of confirmation, shall we say, and that is the 8 EMA. And why do I use the 8? Because it's fast enough to show you what's going on with the market, but it's slow enough that it can be a decent move, if you like. If you have it too quick, like a 5, it hugs the price too much and it jumps from side to side too quickly. The 8 or a 10 is a good sort of happy medium, because when the price crosses, then it can stay on the other side for a decent length of time. So as we can see, it's crossed here on the 15 minute, which is good, and that's kind of what I wanted. I wanted a close above it, so I can now put an order in here with a view to get up here somewhere as a maximum target, and you can carve off on the way up. You often see me scale, and I do, and I'll scale out, I'll scale in. There's different ways you can trade. However, what I'm looking at the moment, I'm still keeping an eye on the candles, because as you can see, it's pushed up, it broke the moving average. Is it time to go? No, you still need to wait. If you are itchy trigger finger, put your order above the candle, so it must go into it. So if I had an order here, I'd be relatively safe. But as we can see, the price is now just pushed under there. So what I'll do is I'll just sort of hang fire and I'll watch it and see what happens. Chances are it'll probably be about 11 o'clock. Give it another 10 minutes just to see what's going on. Now, sometimes waiting, you miss trades. There's nothing wrong with that. There really isn't. And it's a little bit like what I was alluding to earlier on about chasing money. If you're chasing the money all the time, just pack in, go work in McDonald's. Because trading ain't for you. It's not. And I know that's harsh and it's hard, but it's a cold hard fact. And I'd rather tell you that than you try and chase every wave and lose everything you've got in your bank account. That's just morally wrong. You're better off having a hard truth that you just can't do it, and save you a lot of pain. I had a barrage of messages over the weekend and one thing and another, and they're all were the same, you know. They've been watching the Lambo boys and they just think it's easy. It's not. It really isn't, you know. And even if you buy a course, you're still not going to be a trader. You know, it takes years of contemplating what you're doing and understanding what you're doing. And the technicals I can teach you in less than an hour. I really can. Piece of piss. It really is. You know, but the mindset and the understanding of the mindset takes a long time to control. Think of it about driving a car. You know what a steering wheel is, a clutch, a brake, an accelerator. You know what the gear stick is. You know all the technicals of the car. You may say you can drive it. You need to be taught. And that teaching takes a reasonable amount of time. And then even when you have passed your test, you then learn to drive. Because what's in a textbook and what's on a motorway are two different things. You know, it's dynamic, it's moving, it's different. People are mental. And you see it more and more on the roads these days. Anyway, what are we looking at? Well, it's starting to push over. So that's pretty good. I like that. The tail at the bottom, I like that as well. So we mightn't even have to wait our 10 minutes. We might be okay. Now you'll notice I have a little black line in here. What that is, there is my bounce lines. What that means is I'm prepared to stage in and out of the market up to that line. Once it breaks that line, I'll be fully committed to the trade and I'll just let it run. You know, because I could enter here, take a little bit of money off up there for argument's sake. I probably won't. What's that? That's 80 to, no, I wouldn't. If it was 5 pips, I probably would, you know, 25 quid. But if I got down here, I would be taking money off there, let it come back, take money off there, let it come back. If it came down here, I put more money in. If it came down here, I put more money in. And I would stage in down into these. You know, I'd be quite happy to stage down there to come back. And it's all about managing a trade. Because I'm a believer of that. So you start your position small and you build on it. It's that simple. You know, all you're doing is trying to get a better price all the time. So what I'll do is I'll just leave the camera running rather than rabbit on, and I'll let you see the entries come in, and then I'll come back to you at the end and tell you why I did it and how I did it. That was that, guys. Stopped out. One of the fundamental rules of what I do is once I move a stop into position, it only goes tighter. It doesn't loosen. And you take your measures. And that's exactly what's happened here. Spoonful of medicine, but a spoonful of cash. Let me explain. So what have we done for the day? Well, 279 quid. In a market that is in a heavy downtrend. But did it go anywhere? No, it didn't. Look. There is sort of 9 o'clock in the morning here. And all it's done is bounced between two of the zones I marked in. Now, if this was 1, 2 o'clock maybe, I'd have a tendency to go back into the market. But because it's late on, it's 4:15, and I've also achieved the amount of money that I need, because I only look for a couple £100 a day, I'll stop. And then I'll reevaluate all the charts in the morning and do the whole process again. And that's all trading is. It's not being greedy. It's looking at the market. Now today, my belief was this. I shall show you. Let's take it out to a 4 hour. I could see the heavy downtrend, but it has been like that, well, since Wednesday last week. Something somewhere has to give. And it's this sort of move here I was looking for. And if I take a measuring stick out, just get the measuring stick, go kind of from there to there, just to give an idea of what's going on, then put that onto there, we're roughly at the same place that it went back on itself last time. Okay, so it was a high probability that I could catch something to the upside, but I had to be careful because this could have easily got down into this level, and that's why I'm conservative. And it's where Scruffy Madness comes into play, because you'll have seen that I put extra positions in over and over again. Basically what was happening was, as a position moved up and it had a reasonable amount in it, I took the bulk of the position off but left a little sliver, which meant I could open up a new position relatively risk-free because it's already being paid for by the profit that I've taken out. But if I got it wrong, I've got a little bit of money to offset the loss. So it helps my risk reward. Let it move up, take it off again, comes back, do the whole process over and over. You also would have seen that I had a green zone, which was here, with a line within it. Now that line is my point of no return. Once the price has breached that line, I stop scaling, because it means the trade is now starting to move, and there's going to be hopefully some kind of reaction point up to the upper level, which is the next red zone. Did it happen? No, it didn't. And this is why I scale, because nobody knows. Nobody knows what's going to happen in the future. But you can take a look at what happened in the past to try and formulate a good idea. And then just manage your trade. And that's what you've seen me do. And it's paid me. So there we go. This was sort of talked about right the way through the morning with the scruffs, as I do. And as you've just seen, this was shouted out way before the trade was taken. Can't be any fairer than that. So if you're stuck, by all means contact me. I genuinely answer every single email and message that comes in. And like I say, there's plenty of links in the description below. If you want to know more about the Scruffy Squad and the Discord, there's a full description of it below also. So as always, guys, do what you love, the money will follow. See you all in the next one.